So these intraday stock market manipulation rallies are becoming weaker and weaker, less and less effective as professional managed money continues and increases to sell the rallies. So by the time the stock market closes, US stock market closes each day, rallies tend to be faded or sold off. And today in the stock market, I believe there was a 400-point intraday rally on the Dow, and by the end of stock markets closing, 300 points had been given back. So in today's show, before I do any more analysis or my comments, opinion, talk about any current events, I'm going to do a stupid disclaimer. This entire show is for informational and educational purposes only. I am not a financial advisor. You should talk to your financial advisor, and they will no doubt try to sell you GE stock. They will no doubt tell you to buy the fucking dip. Oops, did I drop the F word on a live stream? Oh well. And basically, just do your own due diligence, do your own research. Don't trust any one person because you don't know who is paying, which paid advertisers are paying them off to pump. Okay, without disclosing. Okay, so now on to the rest of the show. So I was doing some research of the stock market, and on the tape action for the stock market, it's bearish. So the old saying, for those of you who are not familiar with the stock market, is amateurs open the market. So people with money, if you're a doctor, lawyer, some other type of profession, you call up your broker. Those trades tend to be put in the morning. People look maybe at the business news or stock chart later at night. They put a trade in to tell their stockbroker to do it in the morning. But it's the professional money managers, the professional traders, the professional investors, the professional finance people who close the market, who are there at 3 o'clock, 4 o'clock, 5 o'clock p.m. in the aftermarket, who actually do the closing prices. It's not the amateurs who are doing that. So the closing prices each day, for those of you who don't study the stock market like I do, the closing prices tend to matter more than the opening prices. Okay, so the prices at the end of the day tend to be far more accurate and far more important than the prices at the beginning. So I was doing stock market research, like I said, and another thing that goes into this thesis now, besides the tape action that managed money, professional money managers, a lot of them, not necessarily all of them, but a lot of them are starting to really sell these rallies and go into full defensive mode. And, the textbook definition of defensive mode is raise cash. So go to US dollars, is to go to US treasuries for safety, is to go to utility stocks, is to go to gold. The other one, which most people might not know, is those yen carry trades, which are very leveraged in a defensive market where you're not trying to be aggressive, you're not trying to take as much risk. Those yen carry trades are going to be closed out, which means those traders or hedge fund managers or investment bankers who are doing those trades, they're going to have to buy yen. They're going to have to go to cash in that. They're going to have to start unwinding those trades. Okay? So another point here about the bear market is I was looking through 52-week highs and 52-week lows. And so looking at these for one day doesn't necessarily mean a whole bunch. It's more of a trend established, okay? So basically, besides tape evidence from stock market price action where these intraday rallies are not really, they're weaker, they're not lasting as long. We've seen patterns of this now for months. Another pattern is if the stock market was in a bull market, there would be was in a real healthy bull market, because obviously the FANG stocks went up and that led the stock market higher. That was a bull market, but it was not a healthy bull market. There was not a breadth of lots of different stocks making 52-week highs, okay? So if it was a healthy fundamental bull market, there would have been more stocks, more companies making 52-week highs. What we are seeing now in the with the 52-week highs and 52-week lows, and like I said, you can't just look at one day for this, but it establishes a trend. If you check these things out, say every day, or you look at the 52-week highs and 52-week lows every couple weeks to check this. And so yesterday when I was looking at 52-week highs versus 52-week lows, it was just under 20 to 1 of stocks making 52-week lows versus stocks making 52-week highs. And today, on today's close on December 12th on the live stream show, there was 82 different stocks. This is according to NASDAQ.com, which does this information for free. There's other websites that do this as well. There was 82 different stocks that were making 52-week lows versus only 7 stocks making 52-week highs. And I'm about to talk about this. I think this is another important trend. Of those 7 stocks at the end of market close today that were making 52-week highs, a lot of those stocks, guys, are defensive stocks. These are not typically stocks that are bought in bull markets, that are bought for enormous revenue growth, enormous earnings growth, margin expansion. These are not a new product or service. These are not those types of stocks, okay? So the stocks on NASDAQ that are making 52-week highs, you have American Superconductor, which is like electricity company. I think that's alternative energy or tied into utilities. Casey's General Stores, which might be similar to like a Dollar Tree or Dollar General type of store. You have Hawkins Inc. I'm not familiar with that company. You have NF Energy Saving Corporation. You have Ottertail, which I will also talk about. That Ottertail is a utility company. You have Scholar Rock Holding Corporation and Trident Acquisitions Corp. Okay, for the purposes of the case study today on today's live stream show, we're going to go with Ottertail Corporation because I set up some stuff to talk about with Ottertail. So Ottertail Corporation is over $51 a share, and the stock is up almost 30% since the end of February. And at the end of February, as you guys remember, that was not too long after the VIX started to crack. So that really worried some people. So the Ottertail stock was in a downtrend. And then once the VIX started to break back then, some managed money started to accumulate positions again in Ottertail. Ottertail Corporation, OTTR, Oscar Tommy Robert, is considered one of the better utility stocks because they've had earnings growth. They have almost a 3% dividend yield. There's some good fundamental stories there, although in general utilities are not the best of businesses. They do have a local monopoly, but there's often a ton of government rules and regulations limiting them from raising their prices. But Ottertail Corporation is up around 30% since the end of February, and I would consider them, even though they have pretty good fundamentals, still a defensive stock. Okay? And basically, this stock is in such an uptrend now. I think it got as low as, let's see here, it was as low as like 30, 38, 39 a share, and it's at over 51 a share now, and it's in a big uptrend, and it's making new 52-week highs the last couple days, which means that a lot of people are jumping on this bandwagon. You could see Ottertail Corporation, which is a utility, and this is how out of whack a lot of the stock market still is in general. You may see the stock end up trading at 30 times earnings for a utility. Ugh. Not exactly. I mean, it has a pretty safe dividend yield, but 30 times earnings for a utility, not the best long-term buy there. But short-term oriented money managers and traders, these high-frequency trading algorithms, they are going defensive. And you see that also, besides just Ottertail, there was another stock, let me look it up. Yesterday it made a 52-week high. Today it wasn't on the list. It was the Invesco DWA Utilities Momentum ETF. So it's not an individual company, it's a collection of utility stocks. That's PUI, Paul Umbrella Israel. So some of the stocks lately that are making 52-week highs are not growth stocks. They are defensive stocks that are making 52-week highs. So I think that's an important point to note. The other thing about the stock market is FANG stocks are now down around 24% from the peak, and global systematically important banks have now fallen around 33% from their 52-week highs. So that's clear bear market territory for these stocks. So we may have additional bear market rallies along the way, but there is a lot of managed money, a lot of professional investors that are now fading or selling rallies and starting to go defensive. And some of my other points for the stock market, and the stuff I'm talking about, stock market, bear market, doesn't mean an immediate crash, okay? does not necessarily mean an immediate crash. And I'll give you an example of this. So the yield curve went inverted before the 2008 financial crisis. It actually started to go inverted. Most people don't remember this. I was not at the time in 2005. I was not paying any attention to stock markets. I was still in college and still, big on video games and sports and girls. But, the yield curve went inverted in 2005. And before the entire mess, the real estate bubble subprime started to burst in 2006 and 7. So it took about 2 or 3 years for the inverted yield curve. Some people say 18 months, but it took a good amount of time for that to work through all those credit bubbles, all those misallocations of capital, those ridiculously overvalued asset prices often bought with leverage. I will talk about listener Q&A later. I want to get these points, guys. I have a lot of notes to go through. I don't want to keep you guys. I'll try to get it around an hour. I have a lot of stuff I want to go through. So we'll try to be efficient here with things. So utility stocks are starting, especially the best ones with the best fundamentals, earnings growth like Ottertail. These stocks are starting to go parabolic now. And in normal bull markets, stock bull markets, that's not the type of stocks that people buy. Utilities are normally heavily bought in defensive. The textbooks and market action teaches you in defensive. In bear markets is where a lot of cash goes into utilities. Okay. So the other thing I want to talk about is the dollar rally still. So the dollar index is at 97.07. So the dollar, when we're recording this live stream. So the dollar index has finally gone through 97 overhead resistance. I believe it's taken more than a month. It's now closed, I think, a couple days in a row above 97. And I think there's a number of different reasons for that. So you have weakness in the European Union. If the euro is going to be weak, if the European Union is going to be weak, because the dollar index is made up mostly of the euro and the Japanese yen, that means the dollar is probably going to be strong relative to those currencies, the G7 currencies that are mostly make up the dollar index. So it may also be the reason the dollar index is strong that next week, which is the next Federal Reserve meeting, I think it's December 18th, that Jerome Powell just placated Trump temporarily and he's still going to hike. So the dollar index may be sniffing that there will be another rate hike next week. Plus the problems in the news with France are awful. Not that the mainstream media news is actually covering properly any of that crap. The mainstream media, the mainstream media is crap, not the people in France. The people in France have a right to be upset, unless they voted for socialism. But euro weakness, problems in the euro, bad things on the news in England, the stuff with Brexit, all the problems today that came out where the Prime Minister of Theresa May of the United Kingdom, she almost got a no confidence vote. Not exactly sure what that means. It sounds bad. But, all these problems combined mean the dollar rally is going to continue. There's going to be continued dollar strength. Now, eventually, as you guys know, the dollar strengthening is going to be a wrecking ball. It's going to do immense amounts of damage to the global economy, to emerging markets, to the corporate bond market, etc. And there's some really good coverage out there of the stuff in France. Stefan Molyneux just did a 35-minute video today he released talking about how socialism and all the craziness around it has been, infecting culture in Europe for many decades, even before the Berlin Wall fell, before the Soviet Union collapsed. How a former KGB agent was admitted that they were poisoning European culture for decades. Correct, Adrian. Unfortunately, most French voted socialist. Same thing with a lot of England. A lot of people are brainwashed or uninformed. So the dollar rally is finally above 97 overhead resistance. We may see quick moves to 98, 99. The next major overhead resistance levels, well, let's see if the dollar index actually closes above 97 for another couple days. But the next major overhead resistance levels are like 100 and 102. Basically, you're looking, in my opinion, at big warning signals for the next global financial crisis if the dollar index gets above 102. That would mean that there's big problems. And I think we're starting to see evidence of big problems. Look at the stories that are coming out with European banks and the stock charts for European banks and the news out about Deutsche Bank, whether it's German government and German regulators talking about merging Deutsche Bank and Commerzbank and then working on some type of bailout with that, or the raids that occurred at Deutsche Bank. Actually, I think I have an interesting theory about the raids at Deutsche Bank. So everyone knows about the problems with Deutsche Bank's over-the-counter derivatives, that there's been, charges there with market manipulation and money laundering and fraud. And maybe the raids at Deutsche Bank did have something to do with that. But, and I hope I'm wrong about this, I really hope I'm wrong about this, but I think the raids at Deutsche Bank at their headquarters were done specifically by the deep state and their operatives to go after President Trump, because if you look at some of the stuff that the mainstream media has been leaking for a while and Democrat congressmen have been saying, that they want to release and go after all the details of all the loans that President Trump got when he was a real estate investor over the last 30 or 40 years. They want to look through and see if there was any corruption and stuff. They're going to leak, guys. The next year is going to be in 2019. If you thought the drama with the media and President Trump was a circus, and it's only going to escalate with the Democrats regaining a slight control of the House of Representatives, it's only going to escalate. They are going to leak all of his tax information. They are going to go after his friends and family members more. It's going to be a absolute KGB Gestapo type of circus. They're not giving up. So I think the Deutsche Bank headquarters, one of the main reasons they were raided is they're going after the paper trail of all of Donald Trump's real estate loan documents. Maybe he got some type of sweetheart deal or he gave bribes or something like that. They're going after any detail they can to fry him on. And they're going to embarrass him. They're going to make things even worse. You're not even hearing in the mainstream media that he was blackmailed by Stormy Daniels. Even the douche nozzle on Fox News, Shepard Smith, who's an awful anchor and not even Republican, he won't even bring that up. He just says that Donald Trump committed crimes with the Stormy Daniels path. Only Tucker Carlson brought up how Stormy Daniels and creepy porn lawyer Michael Avenatti were actually blackmailing him. This is just, Fox News is bad too. The media coverage in the United States, the corporate media, mainstream media, and Fox News and cable news is just atrocious. Absolutely atrocious. If you spend more than a certain amount of time watching any of that garbage, you're going to be totally misinformed or brainwashed. Okay, on to the next topic. So General Electric was below $7 a share. I didn't look at it before I started recording the show. It was below $7 a share yesterday. General Electric is not in the danger yet of pension funds and mutual funds dumping the shares. However, if the stock price goes below $5 and closes there, $5 a share, and closes there for a number of days in a row, there are pension funds and mutual funds out there that have bylaws that will be forced to start dumping General Electric shares. And this will create an additional vicious cycle, and this will start to cause immense problems for General Electric that may actually exacerbate and accelerate things with General Electric and cause a faster need to restructure or bankruptcy for General Electric than the people who are running General Electric now were planning. Yes, Nicholas, OAN News is pretty good. I actually met Jack Posobiec on Thursday. I'll talk about that later in the show. Okay, let me just check my notes real quick, make sure. So the main thing I wanted to get across to you guys is there's a good amount of evidence now that, okay, we're not going to have an immediate stock market crash, but things are setting up for really bad, in my opinion, middle to end of 2019. So every stock market rally is being faded. So the rallies are weaker, they're less and less effective. There is just not a catalyst out there, especially with the European Central Bank and others talking about ending QE programs, ending bond buying programs. Europe is in the European Union may be having an existential crisis because the European bank stocks look bad. And as you guys know, I broke that story about the currency swaps, and the U.S. government and the Federal Reserve and the U.S. Treasury have basically been keeping Europe alive since 2008 and lying about it. So if they need additional bailouts and additional currency swaps, things are even worse than we thought. And for Donald Trump over the summer, only a couple months ago, to even joke or float a trial balloon about the U.S. Treasury buying Italian government bonds, and I don't know if he was being honest about actually wanting to do it, or if he was kind of half joking about it, or trial balloon or whatever. But, for him to even talk about that is scary. And most people miss that. And so Europe, in a lot of different ways, whether it's with the banks, whether it's with the government bonds in the different European countries, socially, with the riots and so many other things, socialism in Islam, the immigration problem, socialism and Islam that have basically run rampant through Europe and destroyed their own culture. And along with the other immigration problems with the welfare state that the European governments cannot afford, Europe is becoming rapidly destabilizing. Rapidly. So, if you're an investor and you're short-term oriented, if you're a hedge fund manager, you can't think about years from now. You're going to look and see there's more problems in Europe right now than there are in the US. And so I think a lot of people, a lot of managed money, a lot of hedge fund managers are very short European stocks, European banks, and the euro as a currency. $5 penny. EU won't break up. Well, if the U.S. wants to keep the EU together, then they might, but they have immense financial problems and the banks are going to need to be bailed out. So the math doesn't work for the euro right now. So something's going to have to be done probably behind the scenes. If it's not broken up, someone's going to have to come in and bail them out. Maybe it's the Chinese. Maybe the U.S. and China come up with some type of bilateral bailout agreement to help the European Central Bank and the European governments. So it looks like, remember guys, I said the 3 highest probability economic landmines, the largest ones that could do the most damage in the near future, I've been saying this for a while, were European banks. So that also counts. We should throw in there like European governments and European Union having immense problems. You have the U.S. corporate bond market, and then you have emerging markets. So those are still the largest economic landmines out there that can do the most damage. And eventually, the problems will come from the problems will start in those areas probably, and then go back from the periphery to the core. Because that tends to be how a lot of crises start, whether it's subprime infecting regular prime in 2008. Or in other emerging market crises over the last couple decades, where the problem started in emerging market and then infected American banks or European banks. So I already talked about the inverted yield curve. So just because the yield curve now starting to invert does not mean an immediate problem. It may just mean that things are going to start accelerating for the worse. And we'll see if the Fed rate hikes next week. So normally on average it takes, with an inverted yield curve, about 18 to 24 months, sometimes up to 3 years to do immense damage. And I already used that example in the 2008 financial crisis, how the yield curve, I read an article from Christopher Whalen, the banking analyst, in 2005. So there was no, the people who were shouting that the real estate bubble was going to collapse in 2005, people were laughing at them. Remember what happened with Peter Schiff? Well, that was really weird. Someone didn't like my live stream here and they temporarily kicked me off and then just restarted it. That was really weird. I just got a notice saying my live stream was complete and I didn't hit any buttons. The man's out to get me. They've already screwed over my YouTube channel. Now they're just going to shut down my live streams. Okay. Let me check my notes again. Okay, so we're making some progress now on the stuff I wanted to talk about. Okay, so I wrote a Seeking Alpha blog article. It's only 1 page. It's about the gold and silver mining stocks. I will put it in the information section of this live stream show after the video's up. Okay? You can take a look. Talks about the royalty and streaming companies, talks about some of the larger gold and silver miners. It's a pretty good summary of the gold and silver mining industry for those of you who have asked me. Okay? Take a look at that. After this show is over, I will attach a link to that. Okay, already talked about the Deutsche Bank headquarter raids and my theory about why the raids are going, besides just the trying to find crimes of money laundering and market manipulation. Maybe the real reason is the deep state. going after Donald Trump, preparing for 2019. They're going to they're going to attack Donald Trump on all fronts. It's going to be absolutely horrible. He's a billionaire. He didn't need to do this. He's trying to save the United States, and they're going to try to ruin his life and ruin his kids' lives and ruin his friends' lives. So, bye. Oh my God. Okay, so I saw another story about Canadian home equity. Yeah, need some water. I just saw a story in the last couple days about Canadian home equity loan defaults. So this is kind of the news we've been waiting for a while now. Everyone knew that real estate prices were drastically overvalued in the major Canadian cities in Toronto and Vancouver. And I'd heard a lot of these stories anecdotally from my Canadian friends, that a lot of people were using their home equity as basically like ATMs and pulling stuff out with home equity loans. And some of them were paying off the loans, and some of them were betting that home prices would keep going higher. And it looks like that there's a mass acceleration of default. So in Australia and Canada, two areas that have not really had a bunch of recessions. Australia had technically not had a recession, I believe, officially by the government for 25 years. Australia is now having an immense real estate collapse. And and now Canada is starting to have some problems too. And that's with, Canada's economy is not really as resource dependent as it used to be. So the resource bear market with a lot of resource prices hasn't nearly hurt the Canadian economy as much, because I think that the banks in Canada had fired a lot of their investment banking for natural resources, and they had transitioned to real estate and, consumer stuff in Canada. But it looks like that's starting to slow down and sputter and collapse as well. Okay, Janet Yellen. Oh, this is another warning from another financial elite. Former Fed Chair Yellen says excessive corporate debt could prolong a downturn. So we're even getting warnings now from Janet Yellen on her speaking tour that the corporate bond market will eventually implode. Thanks, Janet. I thought we weren't supposed to have a financial crisis during the rest of our lifetimes. Isn't that what she said right before she left? I guess because she's no longer lobbying to keep the job again, that she can actually speak her mind more, rather than giving us economic propaganda that there wasn't going to be another financial crisis in her lifetime. Do you guys think that Brexit is dead? Because, they've been dragging this out, for over 2 years now? It's almost 3. Actually, in June of 2019, it'll be 3 years, right? They've been dragging this out for a very, very long time. It'll be Brexit in name only, right? It won't really be a Brexit then. It'll be like, oh, we're labeling it Brexit, and we're really still joining the EU on most of our stuff. It's kind of like how Donald Trump, with a lot of his trade deals, he labels everything a win and says, oh, my trade deals are so much different than the other trade deals. Well, supposedly a lot of his trade deals are pretty similar to NAFTA. There's obviously some differences, but a lot of the stuff was the same from what I've heard from people who've actually read it. Okay, we're almost done with everything. Couple more current events and articles to talk about. So I saw this really interesting Wall Street Journal article, and they were interviewing American businessmen who were doing very well in mainland China, and then all of a sudden their businesses got ruined. And apparently now, over the last couple of years, the environment to be an entrepreneur, if you're a foreigner, if you're a European or an American, going to China to try to make a consumer business, a restaurant, retail, some type of other innovative business there to serve the Chinese consumer, they're getting run out of China on a number of different ways. So there's massive new taxes on foreigners, on Americans, if you start and build a business there. And then also, from what I was reading in the article, it sounds like basically if you build a business there and then train Chinese workers, they just, after you train them for a while, they just totally leave the business, raise money on their own, and then copy you and rip you off. So a lot of Americans are now out of China. And basically, this sounds like part of the China 2025 strategy. Everything's built in China. They're trying to walk that back in the mainstream media press. The Chinese government, since they have a massive propaganda office in the CCP, they're actually really good at propaganda, so they're really good at press releases. So they issued a press release saying that they're going to be reducing the China 2025, but I think that's just talk. I think, based on their actions, from what we're hearing from entrepreneurs and successful small businessmen who were American or European who are having to leave China and flee China because their businesses are in trouble, that the press release that they're going to walk back everything made in China 2025 is the press release is propaganda. That China's not going to be planning on doing it as much anymore. I really think that China, there is some good innovation and entrepreneurship in China, but the more stories I hear about China, the more I'm convinced that there's massive amounts of fraud, and a lot of the stuff there is house of cards. But, China has gold, right? So they're going to rule the world. Best case scenario is Japan. Actually, Wendell, the social credit score in China is far worse. Although the techno-fascist big technology companies here in the United States are pretty bad, like YouTube, Facebook, Google, Twitter, those guys. Okay, I think that's pretty much it for all the stories I wanted to talk about. Yep, that's it for the stories. Oh, there's a couple other points. So we have Babylon Berlin. So I just finished that show on Netflix. It doesn't have the best critic ratings, but a lot of money was spent on it by German television. And it takes place, if you're not familiar, not all you guys like historical type of TV shows, but I like that. I like learning about history and how people interact in the past and how it's changed to present. And so the Babylon Berlin show is what happened to Germany basically about 10 years, give or take, before the Nazis won, before Hitler, won the elections and started implementing all that stuff. And it shows, that the police are killing, socialist protesters. The protesters are killing police. It's a growing police state. It's a growing bureaucracy. There's lots of immoral people there, enormous amounts of corruption. Women are doing prostitution, families, there's like 8 to 10 people in a family living in a tiny crowded apartment. There's stuff like that. So kind of a lot of that stuff is unfortunately happening again today. It seems that it took about 80 to 100 years, and people are about basically making very similar mistakes. It took 80 to 100 years for a lot of the past mistakes from past generations to be unlearned. And so now a lot of the same mistakes from the 1920s and 30s are being repeated again. It's just really sad. So if you want a kind of a preview of what's probably coming to the United States, I would take a look at Babylon Berlin on Netflix. Because socialism, people are like, they can't afford inflation and taxes. They're complaining about the police state. Socialism becomes very popular in the Weimar Republic, Germany. This is before the hyperinflation, I believe. It's after the story takes place, is fictional, after World War I, but before the Nazis. And before the Weimar hyperinflation. So I found that show pretty interesting. The other thing for my listeners, since I'm always looking for educational material deals for you guys, there's the massive Audible sale. If you are an Audible subscriber, this is members only. I'm not getting paid to say this. I care about you guys and want you guys to learn. If for every book you have in your wish list, you can get 50 to 70% off for the next couple days only. So if you had like an entrepreneurship book, a self-help book, a biography, business books, finance books, there's a new book out by Howard Marks about value investing. So if you want to go buy that book, it's 50 to 70% off if you sign up for Audible, a member, or if you're already a member and you put in your wish list. Pretty good stuff. I already have too many audiobooks I have to catch up on. I bought a couple books, though, anyway. That's something I don't mind wasting my money on. And I'm using wasting in air quotes. One more point I wanted to bring up. So, you know, Congress, I'm really fed up with both parties in Congress. You know, mainstream rhino, neocon Republicans, and then also the Democrats. And the Democrats are just, once they get control of the House in January, things are just going to be, it's going to be a 5-ring circus. Not a 1-ring or a 2-ring. It's going to be a 5-ring circus. You know, there's going to be, man, there may be many dozens of different investigations. So the truth about Congress, both political parties, there is over 25% of Congress on Alzheimer's medications. They have faulty memories, can't remember shit. They should not be in Congress anymore. If you can barely remember your friends or family members' names at all because you're on Alzheimer's medications, you should not be making key decisions in the country. On top of that, Congress is so corrupt, and Mike Cernovich broke this story a year ago, and this story got verified by mainstream media journalists too. Not that mainstream media journalists are actually good journalists, but the mainstream media journalists did actually verify this particular story. Cernovich broke that John Conyers had settled with taxpayer money, might I add. He was a House of Representatives member for many decades out of, I think, the Detroit, Michigan area, that he had settled many sexual harassment lawsuits with taxpayer money and had the victims sign non-disclosure agreements. Well, basically Cernovich, and I've heard this from other sources too, that there are many, many dozens of U.S. Congress members, both Republican and Democrat, although mostly Democrats, that have settled sexual harassment, sexual assault, and rape allegations with taxpayer money settlements, non-disclosure agreements signed, because most of these guys are lawyers and enormous scumbags. And so these are the people making some of the key decisions in the United States are either on Alzheimer's medication, they're corrupt to the core, they're getting paid off by Wall Street and the military-industrial complex, or they've settled multiple sexual harassment or sexual assault allegations with taxpayer money, massive amounts of taxpayer money. Some of them are pedophiles too. And those have been settled as well with non-disclosure agreements, and they've done it with taxpayer money. And we don't know about it because it's non-disclosure agreements. And we only find out about 1 or 2 here or there, but it's actually pervasive. Really sad. This is how Rome fell. It took a while, but that's how Rome fell. This is how, like, basically a lot of different empires throughout history have fallen. Okay, well, yeah. It looks like the 1920s and 30s, in a lot of different ways, may be repeating themselves. In Europe, in the United States. I hope I'm wrong, because what came after the 30s was World War II. I hope I'm wrong about this, but it's not looking good. Okay, well, we are at a little over 38 minutes, and now I could take a look at some listener questions and answers. I don't have that much time. We're going to try to keep the show to around an hour. Nicholas, Stormy Daniels did sign a non-disclosure agreement, but her creepy porn lawyer attorney Michael Avenatti and her decided to blackmail President Trump anyways. And no one in the mainstream media or Fox News, for that matter, except for Tucker Carlson, has actually talked about that. Not even Judge Andrew Napolitano. He's saying that Trump committed a felony. So Judge Andrew Napolitano, I normally respect a lot of his opinion and analysis. I think he's a great constitutionalist and limited government libertarian. He's not acknowledging that basically Donald Trump was blackmailed on this particular instance. And I believe Trump paid his own money. So if you're a billionaire and you want to either give money to your own campaign or pay people off and stuff, that's your business. Okay? The Democrats are, oh my God, they're going to be attacking Trump and his family and his friends from so many fronts next year. It's going to be truly tragic to watch this. Okay, so I'm now going to take a look at listener questions and answers, and let's see here. Nicholas Allen, QT, or quantitative tightening, that's such a stupid name. Let's just call it balance sheet reduction, is deflating the bubble. We have had the 2 and 5 yield curve inversion and a death cross. Looks bad. Yes, I agree with what you said. It's a question of timing. I'm not managing money as a hedge fund manager, so thankfully I don't have to time this perfectly. Now, my educated guess is that there will be continued propaganda press releases by the U.S. government and other governments to try to lie about economic data, and that this stock market crash will probably, my educated guess, will probably be pushed into mid to late 2019. Unless, like Europe, rapidly deteriorates, because then the European banks will cause counterparty problems for the American banks. The European banks are big enough to do immense damage. I'm not sure if all the emerging markets are necessarily big enough. There is, I think, over $9 trillion in dollar-denominated debt outstanding by a combination of emerging market governments, emerging market banks, emerging market corporations. But we don't know how long the maturity on some of that debt is. So some of that debt may go bad in the short term with the dollar rally. But European banks are large enough to, if they do collapse, to cause counterparty risk for American banks, because a lot of the American banks have been playing games in London. A lot of them moved a lot of their headquarters to London because they got tax breaks and other nonsense, and they were able to do market manipulation in London for a while. And that's also where the euro-dollar game started too, I believe. With Jeffrey Snyder, if you want to go check out his series on the Macro Voices podcast, Euro Dollar University Seasons 1 and 2. Now, he looks at Jeffrey Snyder's a very smart guy. He looks at everything, though, from a Euro-Dollar perspective, every single current event and stuff, which I think is incorrect. The Euro-Dollar is just one piece to the puzzle. The Euro-Dollar, I think he even estimated, it's only about $15 trillion total market. So it's not, there's other markets out there like the over-the-counter derivatives and other markets that are larger and can do more damage than the euro-dollar. Hi, Adrian. Thank you for joining the live chat. Nicholas Allen, I consider E-REITs to be an inflation-protected bond substitute. Do you mean real estate investment trusts, or are you talking about something else? Nicholas Allen, cryptos is a popped bubble. Yes, it was a bubble. Are all cryptos dead? No. It may take 2 or 3. There's so much chart damage and sentiment is so negative that some of these cryptos, for them to come back, it could take at least 2 or 3 years. All cryptos are not dead, but a lot of them are, probably. And the initial coin offering market, I think, is heavily cracked down. Even emerging market countries, besides just the established markets. No, I'm not using the right word there. The developed markets. The developed markets have drastically cracked down on initial coin offerings. The emerging markets, you would think, would be a little more Wild West, but they've even cracked down on initial coin offerings. A lot of them. So initial coin offerings are mostly for Ethereum. So that would probably... Now, the initial coin offerings that do get through with regulation will probably be maybe looked at a lot better. The odds of fraud are probably a little bit lower. But that, in general, cracking down on initial coin offerings will probably reduce demand quite substantially for Ethereum, I would think. Comment if you disagree in the live chat. Stacking assets, you're welcome. Have a nice night. I actually function absolutely best, the way my body works, in the afternoon, late afternoon and evenings. So I have immense amounts of energy right now. Just came back from the gym. Just got a pretty decent workout in. Nicholas Allen, utilities are also a bond substitute because of their dividends. Correct. However, utilities have some problems. I kind of touched on it much earlier in this live stream show. So utilities, as Warren Buffett would say and other value investors would say, are protected local monopolies. The problem with utilities is they cannot invest in drastically upgrading with research and development, new technology, property, plant, and equipment. There's a long process with utilities to go through that to drastically cut costs and make enormous investments and stuff like that. And utilities also, Nicholas, a lot of them, especially ones in the United States, I can't speak of utilities in other countries, but utilities in the United States, a lot of them are not allowed to increase their prices to their customers without approval from local politicians or state politicians. So that's cumbersome. They cannot operate and that's a trade-off for having a local monopoly where the government protects denies them competition. So the trade-off is that they are not allowed to raise prices or make long-term investments. It's tougher. So it's not the normal business. So there are problems with utilities, but in general, utilities are defensive. And the fact that utility stocks now, Nicholas, some of them like Ottertail and a couple of the other ones I mentioned are making their 52-week highs, that type of evidence tells me that managed money, portfolio managers, hedge funds are going defensive. Also, the strength in the dollar and gold. So we're at a gold price now of $12.45.40. So the gold price tells me, despite the dollar rally, that the gold price is actually holding up pretty good in spite of the dollar rally. So it looks like managed money is retreating into gold. Some of the gold stocks are holding up pretty good. It's mostly the 5 largest royalty and streaming companies that are doing well. Even the mining stocks may have had a little bit of a rally, but I think in general a lot of the mining stocks are kind of in trouble still operationally. Now the oil price going down may have helped some of their margins, but let's see. The oil price I think is at 51. I think that's the WTI price. So let's see what the oil price does and how long it stays here at these prices or if it goes lower. But if the metals prices crash, I talked about this actually without me going into analysis. I explained a lot of this in my Seeking Alpha blog article. It's 1 page. Talking about oil prices, margins, metals prices, etc. But the fact that the gold price is holding up strong with a strong dollar is showing that managed money is starting to retreat to defensive positions. And that's why I have this turtle, this little cartoon turtle hiding in the shell with its eye out. I think that's kind of appropriate. That a lot of money managers are looking for the exits. That they're not dumping all their positions at once necessarily, but they are unloading positions now. Stacking assets. Where did you pay $1.94 a gallon? Oh, Ohio. Not bad. It's pretty good. Yeah, gas prices are coming down now. If you're in California or other states where they add on extra taxes, you're not gonna get that price. So you're lucky for now. Ohio's not bad. I'm not familiar with other taxes that Ohio layers on, and I'm not sure. I can't tell you if Ohio is a high tax state or not. But I am familiar with some other states in the U.S. and they're very high tax states, and they look for new ways to layer on regulations. Virginia's rules and regulations and taxes. Virginia is actually the number 1 or number 2 pro-business state every year, but you would not know it if you live in some of the counties closest to Washington D.C. And those are the swampiest counties. That's actually, it's very similar to the Roman Empire. The 5 counties, I believe, right outside of Washington, D.C. are like 5 of the 6 or 7 wealthiest counties in the entire country for average median family income and other economic data collected. So like Fairfax County, Arlington County, Montgomery County in Maryland. There's a couple more counties that I'm missing. Oh yeah, Loudoun County. The new hot county that was basically nothing about even 10, 15 years ago was Loudoun County. Now it's immensely built. Brand new everything there. Lots of houses. During the 2008 financial crisis, Phil Kennedy is a friend of the show. Phil said that a lot of houses and apartment complexes were unfinished and the developers went bankrupt in Loudoun County in 2008. And now all those and a lot more are finished. And there's construction cranes everywhere in the DC metro area, and they're knocking down old buildings and building like brand new, very high-rise luxury condos, mixed use with a couple floors of retail. $5 penny. I see a lot of commonality in the United States between the 20s and the 30s. There's also 1970s stagflation mixed in. This is a unique situation in history. So I see 1920s US, 1930s US, 1970s US, but from a social standpoint, the stuff that is occurring with groups of people fighting with each other, and I think, the people in power, the globalists, maybe the Agenda 21 people, they wanted depopulation through other means, but I think they're now resorting to, we're headed towards, unfortunately, a violent ideological civil war. That is a depopulation method. I hope I'm wrong. I hope we don't get a civil war. But, with all these groups and classes, people are fighting on, age, sex, race, all these people are divided. And they're fighting more and more. It's becoming almost untenable here in the U.S. It just gets worse every day. And Europe is already at a boiling point. Because the people in France were protesting. I didn't talk about this earlier, forgot to. The people in France, the initial protest, Stefan Molyneux talks about this in his video. He has all this research, and he spent 35 minutes on this video. I'm just going to do my quick take on this. But I think, France, the initial protest, I think, started with a gas tax, right? But the main reasons now, a lot of people are protesting that they cannot afford their standard of living has decreased. Prices on rent, prices on food, prices on healthcare, extra taxes, all these things are going up. And their wages are either flat for a while or declining. So their standard of living is being destroyed. And unfortunately, some of these people are socialists. So socialism is not the answer, but some people are thinking that, socialism is the answer. And these are the mistakes I was talking about with Babylon Berlin, how, a lot of the same things were happening in Europe in the 20s as well. And a lot of people started going towards socialism then. And look what all the bad things that happened with regular socialism, the international socialism of the Soviets, and then national socialism, which most people know as, Nazism. Adrian, yes, I agree. The mainstream media is disgusting. They're also pathological liars, and a lot of these guys are paid off by either corporations, Wall Street. You won't see the mainstream financial media say a lot of negative stuff about the bank stocks. Phil Giraldi said even worse stuff about the mainstream financial media. He's a former CIA agent. He thinks a lot of these guys are literally bought and paid for by the CIA and deep state. $5 penny. America is the only nation in the world who can make socialism work. The U.S. cannot make socialism work. The money-producing part of the economy will be destroyed. There's mostly fascism now here in the U.S. It's a select group of companies in each industry that controls every industry. Unless you're a small business owner, if you're a small business owner, there's no bailouts for you. There's free markets. You have to save your own ass. Socialism destroys every country. Now, if the government maybe spends a tiny amount of profits from the private sector, can get away with it for a while because it didn't destroy the seed corn. So as long as what's the old saying about killing the cow or killing the goose? You can take a lot of milk as long as you don't over milk the cow, or you can take eggs from the goose as long as you don't kill the goose or work it too hard. So a lot of these governments are so desperate for promises they made with unfunded liabilities for retirement and healthcare that they're so desperate they're almost willing to kill the goose. Some of them are killing the goose, some governments and some countries. The U.S. is not at that level yet. There's still a lot of savings and capital here, capital formation over a very long period of time here in the U.S. I had Caitlin Long on earlier this year. She talked about that, how the U.S. has had over 100 years of accumulated capital. And that's why the U.S. didn't have hyperinflation and other problems. The U.S. was also able to export all those dollars. And in the monetary inflation and the credit, a lot of it was directed at asset prices. In the real economy, we have stagflation. So we had a listener comment arguing that in one of the last couple interviews or live stream shows that he's had hyperinflation on his rent in San Diego, that in the last 10 years his rent went from like $950 to $1,600. But over a 10-year span, that's not really hyperinflation, that's stagflation. Hyperinflation would be if his rent, in his case study, went from like $950 in 1 year to $1,200 the next year to $1,500 the next year or two after that, and you started accelerating higher and higher prices. So it's not hyperinflation for prices to double, say, over a decade. It's more like stagflation, where you have double-digit inflation rates is the real annual inflation rate. So I didn't respond to him in the comment section that what I said about that, but my view in the real economy in the US is like food, energy, rent, healthcare, education, all these things are in not necessarily hyperinflation, but really high levels of stagflation. Although I think there's an argument to be made that the textbooks and tuition levels are hyperinflating because states do perpetual tuition hikes for universities. A lot of the education costs are insane. If you looked at the price of textbooks, the price of textbooks is up, I think it's way over 1,000% for the price of textbooks, and just the increase for the price of college textbooks in the last, I want to say 20 years or 30 years. So that there's an argument to be made that the price of textbooks has been hyperinflated, but that isn't a free market. That's the universities and the textbook companies in cahoots, and the university bookstores. That's not a free market. And Ludwig von Mises even said that inflation, prolonged periods of inflation where it gets worse and worse and worse, can only be government and central bank created. Yeah, Adrian, I'm with you. Unless we see tape action change or we see a major news story or current event, there would actually have to be like a full trade deal agreed to with the US and China. Or the central banks that are now starting to do QT, they would have to reverse. That would reverse maybe the downtrend and bear market I see in asset prices, a lot of asset prices, but we don't see evidence of that yet. The tape action in the stock market is there are intraday manipulation rallies attempted, and they are weaker and weaker, and they are less effective, and they are being sold. By the end of the day in market close, the rallies, it's almost like they didn't even happen. And I think, because there's fiat money, fiat currency, and because the Federal Reserve and the other plunge protection teams can get away with doing all this stuff, they're not going to let the stock market crash immediately. This is why there's going to be a fight, and why part of the thesis why I think things are leading up to probably towards the mid to end of 2019 now. And if I do change my mind about this, I will let you guys know. Although, to be honest, for full disclosure, I think I already announced this on my Wall Street for Main Street Facebook group that six months from now, I pretty much made up my mind that the free podcast is over here in Wall Street for Main Street on the YouTube channel. That pretty much all my podcasts, my interviews, my live stream shows are all going to be behind a paywall for my 69 and hopefully growing amount of Patreon account contributors. It's just to the point where I do 3 hours of work and bust my ass, and now YouTube makes it so I only get 1,000 or 2,000 views per video no matter what I do. When 3 years ago, when my channel was smaller, I used to get like 5 times that per video. So if you want to blame someone, blame YouTube. I don't want to see any nasty messages or emails. I'm actually tired of getting over 100 emails. I'll disclose this. I've gotten over 100 emails from in the last 18 months from very fluent, very rich, very successful people telling me, basically like complaining and saying nasty things sometimes, why I will not upload all my content to iTunes for them to make their lives easier. And then I ask them, just politely, like, are you a Patreon account contributor? Do you contribute a couple bucks my way a month? And some of them are polite about it, but others, a lot of them are actually very impolite about it. I've gotten a bunch of fuck no's, fuck offs, fuck you, I'm never giving you a dime, stuff like that. Now, obviously, I have 69 Patreon account contributors, and there's some very nice people out there who have also given me some donations to keep the free podcast. But, things are just getting to the point where 6 months from now, I don't think I want to be spending people don't realize this, but it takes me, when I do an interview with a major guest, if it's like a 40-minute interview, it takes 3 hours of work for me to do all the different things that need to be done before you guys get to listen to the interview. And so it's turned into, and most of it is because of YouTube, the fascism at YouTube, that it is basically turned into a waste of time at this point. Now, I enjoy doing the interviews. I enjoy making the content. I've met a lot of great people through the podcast, but to only get 1,000 views when I see other pumper channels and other garbage channels getting 5 or 10,000 views per video for garbage content, and I work my ass off, and now I only get 1,000 when I used to get way over 5,000 views per video on a lot. It's just not really worth my time, especially now because I have a paying gig. So I'm getting paid from a new money manager to do some stock market research for them. So I have to devote more of my time to a gig that pays my bills. And this podcast a couple years ago, it was paying my bills, and now it's not. So, and when I ask people for money, a lot of people complain. So it is what it is. So June or July, guys, there will not be any more free podcasts. I'm sorry, but it is what it is. If you want to blame someone, blame YouTube. Okay, well, there's a lot more questions and comments here. If you want to repeat your questions and comments, I will take a look at them later. Getting kind of tired now. My thoughts are kind of jumbled. So I'll speak to you guys later. I am going to try to book Danielle DiMartino Booth. She has a new computer, so I think she uses Zencaster. So I should be able to get her on next week for the Fed meeting. So we'll get her analysis. I think she already predicted recently that Jerome J. Powell will hike rates next week. That Powell was just placating Trump with words, and his actions, he will actually hike rates next week again. That will obviously anger Trump. That will probably worry the markets more. And, that will probably continue to try to invert the yield curve even more. So the rest of 2018 and 2019 are going to be very interesting for all of us. There's going to be a lot of news stories and current events to cover. And the political stuff that's going to happen with President Trump in 2019, with all the investigations and all that stuff, with the Democrats in the House and the deep state, and even the government agencies going against him, is going to be, there's foreign governments against him too. It's going to be absolutely crazy. Okay, guys, bye for now. I'm tired. Everyone have a good night.